6.5% 15-year external loan bond issued by the Republic of the Philippines in 1965. The Russian Imperial Bond. In 1902, the New York Stock Exchange listed a $1 billion Imperial Russian bond. That translates to about $27 billion today. As a thank you to the New York Stock Exchange for floating his bond, Tsar Nicholas II of the Romanov dynasty commissioned the House of Fabergé to make a gift. This Fabergé urn arrived in New York in 1904 and has been standing watch in our boardroom ever since. The New York Stock Exchange began as a marketplace for federal and municipal bonds, which the exchange continues to offer today. Bonds traded on the exchange have raised capital to aid in the construction of schools, hospitals, railroads, and other vital infrastructure for over 200 years. We believe municipal bonds represent investing in the most important capital any government holds, its people.
Welcome back, everyone, to NYSE TV Live. Earlier this hour, Iowa-based AOT Invest rang the opening bell to celebrate the 2x daily software platform ETF. And Ashley Bastinardi has more on this story from the trading floor. Ashley, down to you.
Good morning again, Kristen. So this fund aims to double the gains of top tech stocks. I'm joined now by AOT Invest CEO John Tinsman. John, welcome to the New York Stock Exchange.
Thank you for having me. I'm excited to be here.
First, I have to ask, how does it feel to ring that bell? I've heard there's a button up there. What is it actually like?
The energy's unreal. You're looking out over the trading floor, everybody's clapping, and you press this button and it starts dinging. It's pretty loud, and you're just having the time of your life. The energy here at the NYSE is unreal.
So tell me, how does this fund work?
So this is the 2x daily software platform ETF. It aims to double the daily performance of the AOT software platform index. The way this works is through derivatives, right? So you get exposure either through options or through index swaps. So you're going to 2x the daily upside or 2x the daily downside, right? So you're magnifying the ups and downs on a single day.
Oh, okay. So is this fund giving investors exposures to stocks they normally wouldn't have exposure to?
I think what's interesting about these daily funds is that you can get exposure for less cash, and then you can also target a specific sector, in this case the software platform sector, which is poised and is continuing to have very strong earnings growth. AI is lowering software development costs right now. At the same time, a lot of companies are reducing their headcounts and their expenses. So we're seeing terrific earnings growth. I think it's a compelling fund to buy. And the daily leverage is something we should get into too, because I actually think that mathematically is a pretty interesting formula for retail investors as well.
How are you achieving 2x daily growth? And because of this growth, is there extra risk involved?
Well, whenever you leverage, you're going to have extra risk to the downside. At the same time, you have the extra reward to the upside. Daily leverage, what it does is it resets daily. So every day it's going down, you're actually selling, and that's managing risk pretty well because you're reducing your exposure to maintain that 2x leverage. On the reverse side of it, on the upside, you're always buying. So you're always amplifying the upside and compounding the shares in an appreciating market. So I think it's an interesting way to, mitigate risk on the downside, but amplify the upside. I think the risk-reward dynamics in a sector that's growing like this, software platforms, is really compelling. The trade-off there for that is that if you have financing costs as you do in any leverage vehicle, and you also can have volatility decay in a sideways trading market because you could potentially, in one that just trades back and forth, buy high and sell low. So I think the best way to take advantage of a daily fund and get that share compounding at the same time the shares gain in value is trying to find a sector that you believe in the short or in the long term has the potential to just grow and innovate like never before.
How do you choose which stocks to invest in?
So this is a passive index, and it's I think the interesting thing about this is it's one of the first times an index has actually been custom created for the use of daily leverage to optimize that, right? So when you think about daily leverage, you want to have companies that are growing, like in this software platform sector, that are innovating and providing more value for people. What you don't want is unprofitable companies, because obviously if you have a company that's highly unprofitable and very in debt, in a market that starts, like a recession starts going down, you're going to be amplifying the downside on that. So this only focuses on profitable companies. It's mainly like the blue chip S&P 500 and NASDAQ companies, that are doing large buybacks that really, provide some sort of floor in these companies. So it leaves that upside on the table. It's trying to take some of the downside out which you see in a traditional index. What they do is they just weight based on market cap, whether you're talking about the NASDAQ or you're talking about like the technology sector. So when you weight only based on market cap, what you do is you can't get the best growth in the portfolio. It just matters about the size of the company. The other thing is you can't keep the unprofitable, highly in debt companies out. So what we're really trying to do is improve on that.
All right, John Tinsman, CEO of AOT Invest. Thank you so much for joining us. Kristen, back to you.
Ashley, thank